The S&P 500 continued lower on Friday, and we're getting very close to retesting the critical support level. First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so Friday SPY was down 0.76%, and we continue to make another lower low on the daily chart as we're approaching the breakout of critical support, which I'm calling this level right around SPY 429. Remember, I've drawn this plenty of times before, and because we're in a bull trend, I think there's a good chance we're going to bounce off that support zone and then continue higher to higher prices, because in a bull trend, you put in higher lows and higher highs. Now, I do think there's a possibility we go below that support and hit the trend line, and that could be a little bit of a bear trap as we're breaking down below that critical support. And it could also scare out some of the late bulls who have been buying this dip that were the previous bears shorting the rally and are now trying to catch a ride to higher prices. So we could go down to about SPY 426 to 427, and that could still be our higher low. And of course, there's always the possibility we go all the way down and fill that gap at 423. Now, I don't think anything happens in straight lines, and because we're in a bull trend, we likely need to put in some type of lower high before we continue to lower prices. So even on the way down, never rule out the possibility that we bounce to a lower high before the next lower low, because just like uptrends are higher lows and higher highs, to get a downtrend, you're going to eventually need that lower high into a lower low. So never assume anything moves in straight lines in the stock market, and keep in mind this is a bull trend. So all of those bears that continue to tell you the stock market is going to crash are simply wrong. If we do end up crashing, it's going to be because of a black swan event, and that means you are taking the lowest probability odds, because predicting black swan events is nearly impossible. And if those bears end up being right, they simply got lucky. They are unable to predict a black swan event. It is simply just fear mongering, because fear sells. Do not buy into the fear. This is a bull trend, which means we are still looking for a higher low into a higher high until we break out of the bull trend, which is going to require what I just drew here of lower highs and lower lows and breaking through critical support. So for example, if we get this structure and we continue to put in lower highs and lower lows and continue taking this path lower, then we're going to have to say the bull trend is over. But the only thing that is going to tell us the bull trend is over is the price action, and that means we need the price action to prove it. We cannot guess. There have been dozens of bears all year long, going all the way back to December of last year, that have continued to tell us this is still a bear market. However, we are continuing to go higher, and we are breaking out of a lot of the bear market rules, where we are now retracing well beyond 50% of the bear markets, which is really telling us that we're likely still in a bull market. So the bull trends are still alive and well, and today we're not going to look at weekly charts, but if you look at the weekly chart, it looks like SPY is trying to get to 450, and that is exactly where our price target is, in that range between 448 and 451. However, before we go there, we need to put in this higher low, and we need to find buyers at critical support, and then that's going to tell us we're likely going to 450. So I still think SPY is going to 450, and I still think we're going to see a pullback and a correction, which is not yet complete. So we're still looking at weakness in the short term, which is why I've been drawing this pattern down towards 430 before we go any higher. Even though nobody knows for sure, this is what I think is happening, and this is the scenario I prefer. But don't forget that I think we will eventually put in that lower high before we hit the low of this pullback, before we go to higher prices. So block out all of the noise and know these critical levels. And right now I'm just going to give you two very simple levels to pay attention to, and I'm going to call it SPY 426 and 429. If you watch those two levels and price bounces from those levels and we start to see high volume impulsive buying, we've likely seen the bottom of this pullback into the higher low, and we're going to higher prices. If price action breaks below those support levels, you instantly need to think something else is happening, and then look for more and more evidence from the price action that we're entering a downtrend. Nothing is more important than following the price action, and nobody knows for sure where the market is going. Even though I'm sitting here telling you I think we're going to put in a higher low around this support before the next higher high, that doesn't guarantee I'm correct. And remember, the market couldn't care less what you think, and the market couldn't care less what I think. So you need to be very flexible, and you need to let the price action do all the talking. And we're not going to know what the price is going to do in this support zone until we see evidence from the movement of that support. And if we get the buying and we get the bounce and we continue into the bull trend, we can instantly start getting ready for that trip to 450. On the NASDAQ 100 triple Qs, we were down 1% on Friday, and the triple Qs are still holding this support zone right around 362, but we are starting to close down below the negatively sloping 5 EMA as we approach the positively sloping 20 daily moving average. So remember, just like SPY, I thought we were going down to 430. On the triple Qs, I think we're coming down towards 355. And I think there's a good chance that is our higher low before we continue higher and get that break above 370. However, if we do break below 355, we also have critical support down here at 347. If we break the support at 347, then we're likely getting a full-blown correction, which is going to take us down towards 337 or the gap fill at 333. So just like I said on SPY, usually when you go into a downtrend, it's not going to be a straight line. You're eventually going to need to see that lower high into the next lower low, and that is where you are going to see the impulsive rejection from that lower high into the downtrend. So until we get this price action, we won't know for sure. And if we start bouncing as soon as we hit 355 or that rising 20 daily moving average, it's still possible that's our higher low and we're going into higher highs. So remember, this is a bull trend, even though in the short term we are getting this pullback. So in the very, very short term, this is still a short-term downtrend, but in the longer term, you can clearly see this is still a medium-term uptrend. So let the price action do all the talking, which means you need to watch what happens around these critical support zones, and nothing can tell you what's going to happen more importantly than just watching the price action. On the Dow Jones, we were down 0.64% on Friday, and as you can see, the Dow Jones has already reached critical support, which was that breakout at 336, and we could be seeing a test of this critical support as soon as Monday, and that is going to be whether or not we bounce from 336. If we break below 336, we have a gap to fill down here at 332, and then critical support at 327. And if we break all of that support, then we are likely going to continue into a downtrend. We'll cross that bridge when the time comes if the price action tells us to, but right now we're looking for strong support at 336, and we are not assuming that support is going to fail. We are going to make price action prove it. If we bounce from 336, we're coming back up towards 341 and the gap fill just below 343. On the Russell 2000 IWM ETF, we were down 1.51% on Friday, and you could see we did break that support zone between 184 and 185, and I said if we break that support zone, we're likely going to see a $4 to $5 move, which brings us down to 180, and that is exactly what happened on Friday. So now that we're sitting at 180, that is our critical support, and only price action is going to tell us whether or not we bounce from it. A very possible scenario in the small caps is that we bounce from this critical support, come back up towards the breakdown, which is going to be right around 184, and then if we get the rejection, we are going to have that confirmed downtrend from a lower high into a lower low, which is likely going to take us down to fill the gap at 176. So in the short term, it looks like we could be bouncing in the indices because I just showed you how the Dow Jones and the small caps are now at critical support, and we also likely need a lower high on the S&P 500 and the triple Qs. So look for these lower high bounces, and whether or not we get rejected, only price action can tell us. You know the critical support zones and you know the critical resistance zones. Just watch the price action and trade accordingly. On the ARKK ETF, we were down 1.24%. We're coming down into this critical support zone between 40.5 and 41.3. And if we hold that support zone, then we still have the bull trend. But as you can tell, the price action is starting to break down below the 20 daily moving average. So the bulls will want to see a bounce very soon and then a continuation into higher highs, and then we'll have another higher low in this bull trend, which could take ARKK back out of the bear market and we could start back into a bull market. So we're going to know very soon as we approach that 50 EMA and critical support zone, which we're currently testing as soon as next week. On the VIX, we were up 4.11% on Friday, and we still see nothing from the VIX that tells us fear is coming back into this market, and this is just completely normal volatility with the VIX trading in this range, and exactly what you would expect to see the VIX trading at in a bull market. This is going back into a bear market or a deeper correction. We need to see that VIX out above 18 to 20. On Bitcoin, we're currently trading right around 30,670, and we are getting another bull breakout above that previous high at 30,500, which means we're likely going higher towards the price target at 35,000 next. Now that doesn't mean we go there in a straight line. We could break out and then continue down for a retest of the breakout and then continue to those higher prices. But overall, you could see Bitcoin did see high volume impulsive buying, which tells us on these breakouts, we're likely returning back into the bull trend. And you can also see the moving averages are starting to cross back over. So Bitcoin is clearly bullish, which is one of the #1 indicators of risk on sentiment. And if we're getting risk on in Bitcoin, we are still very likely going to remain risk on in the equity market. And that is simply a sentiment shift that tells us we are likely not still in a bear market. On Amazon stock, we were down 0.63% on Friday, but we did hold the breakout above 128. So we still are likely going to continue in this bull trend towards the price target at 133 and 134. And your risk level is now the breakout between 127 and 128. As long as we hold above the breakout, we're going to higher prices and we're maintaining this bull trend. On Microsoft stock, we were down 1.38% on Friday, and we're sitting at a very critical support zone between 333 and 336. And as long as we hold this support zone, we can hold on to the bull trend and we can still push higher towards the all-time high prices above 350. So manage your risk right here, right around 333. And if we break that, we're coming back down towards 323. On Nvidia stock, we were down 1.9% on Friday, and we did break down below that support right around 427, which means we could start quickly dropping down towards 398, or at least that rising 20 daily moving average. But I really don't suggest shorting the stock because we're not getting high volume selling, and this has been a very good bear trap stock all year long. So this could be a little bit of a false breakout as we let the 20 daily moving average catch up, and we could find support right around 413 to 415 and then still push higher and push all the way up towards 450. So I don't suggest shorting this stock, but if you are going to short it, manage your risk right down below the breakdown at 427. On Tesla stock, we were down 3.03% on Friday, and it looks like we're getting that pullback because, as I said before, nothing goes up in a straight line forever. And even though I think we are going higher towards 295, I think we need to get this pullback to fill the gap and put in the higher low before we start pushing into the 290s. This matches what I expect to see in the indices, and this is a top 10 company in the S&P 500 and the NASDAQ 100, so a pullback here seems warranted down towards 230 to 235, and then I expect to find buyers and continue the push into the 300 zone. So yes, Tesla is still bullish, but in the short term, I think we need to see a little bit of cooling down because we just went way too far, way too fast. On Apple stock, we were down 0.17% on Friday, and intraday, we put in another intraday all-time high. So there's just nothing bearish about Apple, especially while we're trading out above 185. Above 185, I'm looking for the next target higher around 190, and we're bullish as long as we're above this support at the breakout at 182. On the financials, we were down 0.43% on Friday, and continuing that rejection from the 200 daily moving average tells us it's not yet time to get bullish, but if we can turn around and put in a higher low and break the 200 daily moving average, we could go back on the bull and see the financials looking healthy once again. The industrials were down 0.76%, coming back down towards the support between 101 and 103. So if we find support, we could put in a higher low and continue this bull trend. The healthcare sector was down 0.33% on Friday, building up a bull trend the longer it can close above 131, and I think there's a great chance we're heading higher towards 137 next. The energy sector was down 0.72%, continuing that rejection from that resistance, and it does look like we had that double top breakdown, so if we lose this critical support at 76, expect to see that gap filling at 73. So jumping back over to the S&P 500, it's very important to remember that we are in bull trends across the board, and if you go look at the big tech companies and the indices, we are still in bull trends until we're not, which means we need to see a confirmed downtrend and a break of critical support before we start to get overly bearish. It was okay to short this market at critical resistance because we were overextended and we were due for this pullback, but now that we're getting the pullback, you want to get less and less bearish as we approach critical support, and then you can get more bearish if we break down below critical support and confirm a downtrend. It's very important to let the price action do all the talking and to stay unbiased, because if you have a bias and you already think you know what the market's going to do, you are going to ignore the price action when it's telling you the opposite, and that is how you're going to continue to lose money in this market. This is one of those markets where retailers are being steered the wrong way all year long because a lot of the bears that seemed so smart last year and were continuing to look like geniuses have failed to move on to the bull market and have been completely steering retail wrong because they've stayed bearish. And that is not how you trade the chart. That is called having recency bias and be unwilling to look forward and continuing to just look in the rearview mirror. Yes, last year was a nasty bear market, but it could be over with and we could be back into a bull market now. And as long as we're above critical support, there's no reason to say otherwise. So follow the chart and let the price action do all the talking, and we need to wait to get bearish until we lose critical support. I have two services with the Stocks Channel Trading Discord server and my own trade alert service called Bank Trade Alerts. And if you're interested in either of those services, you can find out how to join or get more information by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.